Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast, Sunday, June the 12th. And we've hit a milestone this week, Kev. It's been a bit of a weird one. Not a good one, I might have to say. Fuel's now £2 a litre in the UK. And there's been an interesting one. I don't know if you've seen the news, but the AA, the Automobile Association, has blamed rivals, RAC's reckless speculation for rising fuel prices. It's mad, really, isn't it? That they've almost like built this story up that much of this speculation. It's going to be £2. And it's hit there. You know, they've had no choice but to move it to those prices. It's a bizarre situation.
Yeah, well, we've seen the reasons for it, really, haven't we? OPEC have decided, in fact, the Saudis, independently of the OPEC Plus agreement, decided to increase the output prices of the oil. So oil went to 120 something a barrel. So this is why, and I don't think it's going to go down anytime soon. Basically, they're just going to maintain it, aren't they? So. Yeah, I mean, we're in a bit of a crisis here in Egypt as well. The fuel's very, very cheap, still sort of trying to do it at cost, but everything's being pushed up, and it's going to be pushed up as well soon as well, because, you know, they may be producing their own oil, but at the end of the day, it's being produced at more than that. I think
It feels like everything's broken at the moment. I mean, I've just been trying to book flights for a trip to Berlin next week, and I was amazed how, like Heathrow, you'd normally get, you know, many different suppliers, everything sold out, having to go the night before. It's £900 a ticket for Berlin. I mean, it's frightening, really. And it's like, you know, the staff shortages there. We've seen all sorts of chaos at BA, lots of airlines cancelling flights, haven't got the staff. You've got air traffic controller shortages. I mean, you traveled recently, right? Did it not feel like things are just broken at the moment on the whole travel scene?
Well, yes and no, but I mean, I was in a flight that was packed, I have to say. So what the airlines seem to be doing is reducing the number of flights and just packing them solid, which makes sense for them, obviously, financially. But for the rest of us, we felt like we wanted a lot more convenience and a lot more other stuff. I mean, the other thing is the security in the airports is just crazy. And do you know anything about anybody who might know anything about
security screening? It's not really my forte, but we've got Arnab Basu, CEO of Kromek Group. Welcome, Arnab.
Good to be here.
So do you want to give the listeners, I mean, probably not many listeners know much about Kromek. We certainly didn't before we obviously talked to you. Do you want to give an overview of what your company offers?
Sure. I mean, we are a technology company based in the UK and the US and operate in two segments, really. One, what we called the advanced imaging, where these sectors we serve is medical imaging, medical diagnostic imaging, security screening, which you just mentioned, and we may have a little elaboration on that, and really industrial imaging. And there we are mainly looking at identifying objects which are hidden from human eyes, and whether it's early detection of cancer, whether it's detection of explosives, or really anomalies in industrial processes. The other part of the business is really what we call the CBRN detection business, which really focuses on nuclear and radioactive material identification and detection, really serving the global security and military markets, but also the civil nuclear markets, really monitoring and keeping critical assets and infrastructure safe from the threat of dirty bombs or illicit movement of nuclear materials. You know, we are a technology company, as I said. We have over 275 patents, operate out of two manufacturing facilities in UK and the US. UK, we are based where I am based in Sedgefield in the northeast of England. And we have our largest production facility in just outside Pittsburgh, in a place called Zelienople. And we have got two engineering facilities in California, where we make specialized electronics, and a facility in Huddersfield. We have a customer base which spans over 50 countries, and our customer base includes major OEMs in the medical diagnostic segment to in the security segment, to international government, security agencies around the world, to power plant operators like EDF, and so on and so forth. So we have got a wide range of customer base, and we're growing.
So obviously, with onto the kind of like the nuclear detection element, and you mentioned dirty bombs. Just obviously, we've seen how things can escalate quickly in with the first land war. It's in sort of probably for 70 years. Probably not many people thought that would happen. And there's obviously talk of tactical nukes that potentially being used. I mean, how much of a threat really are companies taking things seriously, where they actually want this technology to detect the threat of whatever it is, isotopes, radioactive isotopes, to be detected in cities around the world?
Look, I mean, radiation detection is a very well-established segment of market segment around the world, both from a Homeland Security perspective, where security services, police, fire departments are trying to keep critical assets within a country safe against accidents or incidents. And then there is a military part or a defense part of that market, which is more based on situations within a more war or conflict sort of situation. So that market is driven by really a couple of factors. One is any geopolitical instability affects that market, because use of radiation material in a conventional explosive bomb, or what is called a radioactive dirty bomb, is a real threat, and countries spends a huge amount of money and infrastructure and resources in trying to ensure that movements of such material is well monitored, well understood, and ultimately, cities and so on is protected. So we have a wide range of offering, and in there, a unique offering which we developed together with the US government agency, DARPA, started a program in 2014 in developing this very small, handheld, almost wearable, high capability radiation detectors, which not only tells you that there is radiation in the environment, but also tells you exactly how much radiation is there, and where it's coming from, and ultimately and tells you exactly the material that it's coming out from. So whether it's a medical isotope, which maybe a patient who has just had a barium test coming out of a hospital could be emitting radiation, which is relatively safe, no danger to public, to some terrorist trying to conceal some radiation material. So we can differentiate between these detectors. And these detectors can be networked over cloud, and carried by security services, and build up a real-time picture, a radiation picture, almost a radiation weather map of an entire city. And that's what's protecting today critical assets in and around New York City, for example, and many, many other European countries. Big events are covered by that, such as the NATO summits in Brussels. You mentioned a very topical event with, development, an unfortunate development, which is going on right now, a land war in Europe. Who could have imagined a few years back that we are going to experience a land war on our eastern borders? But the threat is becoming quite real at the moment. We have seen indiscriminate use of weaponry in and around quite volatile places such as Chernobyl, Zaporizhzhia. These are nuclear facilities, and although nuclear power plants are built in a quite resilient manner, they're not missile-proof. So the threat of an accident is reasonably enhanced. But we are also picking up, as we are all picking up, that, talk about use of a tactical weapon. What does that mean? What does that mean in the immediate vicinity where it's going to be used? Or, as we know, nuclear clouds travel, like what happened during Chernobyl. The Welsh farmers got affected, the Cumbrian farmers got affected because a lot of the radioactivity got deposited, fell out, as part of rain in that area. So what is critical in this is really real-time monitoring and our ability to have the right data to be able to react properly. Now, if a weapon is used, The only thing we can do is prepare public and react well post that event. But the danger is not just of weapon. We know for a fact that materials in and around Chernobyl was moved. Now, those materials are quite possibly can be used as dirty bombs, as a device. And if that happens in the middle of a city, a radioactive dirty bomb, that is catastrophic. Not many more people dies, but the political implication, the decontamination effort that would be required is pretty drastic. So on all of those background, we are very well positioned to really provide the radioactive detectors, the radiation detectors, which are already used in over 26 countries by security services, already used by very high-profile customers such as the US DoD, US DHS, our own security services in the UK, and many other European and Asian countries. These are highly effective detectors. We are seeing a real movement in that market. If you look at our news flow over the last few months, you've seen several news, announcements of new orders coming through. Yeah. But there is also a commitment from the UK government. This is pre the conflict in the Eastern Europe, of over £300 million of spend in upgrading our existing radiation detector infrastructure that already exists today, but also expanding that in view of new emerging and threats as well. So, and we will play a part in that. So this market is robust. This market we have a very compelling set of offerings in terms of our products. Our products are the world's smallest and the easiest to use, but at the same time, the fastest and one of the most effective way to identify and locate radiation. But also we are very, very cost competitive. So we have a very good set of offering, and we are seeing real customer traction. And of course, the current geopolitical scenario in the world and the increased sort of spending that is going to result as a result of this is going to really keep this market very active for us.
And that CZT, I remember reading about this cadmium zinc telluride detection. Is that something that's almost unique to the products that you're using?
Yes, look, cadmium zinc telluride is a compound which is a digital and a color detector of X-rays and gamma rays. Yeah, and that is a compound that enables many important applications to be done more efficiently, such as early detection of cancer, such as better detection of explosives in aviation security, such as detection of contamination in an industrial process. Now, it is a material which is very difficult to make, and around the world, there's only a handful of companies who are able to make these materials in commercial volumes. And in real quality and quantity that is required. And today, Kromek is the only independent company who has got the ability to make and supply cadmium zinc telluride to customers who are using it. Now, let me tell you why customers are using it and why sort of cadmium zinc telluride and the usage is expanding. Now, let us take a couple of steps back. We have all seen the revolution in the world of photography, where suddenly film-based black and white or photography became extinct within a very short period of time, and everything became color, increased pixel density, very good quality of imaging. And all of that was driven by our need to look at very good quality of photos, which makes looking at a photo almost gives a real life experience of what that photo represents. And that industry was enabled by silicon, which is a great detector of light, which converts light into an electronic signal, which creates those images. Now, similarly, the world of radiography, where X-rays and gamma rays are used, are also going through a very similar transition. And the drivers are very similar as well. Need to have more information within images. So when a physician looks at an image, can the physician immediately identify that blockage in the arteries because of calcification or cholesterol? Is that a cancerous tissue, or is that as a normal tissue? Is that an explosive, or is that just a big tube of toothpaste in a suitcase. Now, all of those requires a quality of information through X-ray imaging, which CZT as a color and digital detector provides. So what silicon has done in the world of photography, CZT is this compound semiconductor material, which does for the world of radiography.
It's all about clarity and depth of information in terms of the actual, how accurate your diagnosis will then be from that information.
Absolutely. And very much so. It is about quality of information from detection, which ultimately enables better decision-making and have a better outcome, whether it's a saving of a patient's life or ultimately keeping an airport passengers moving by efficient sort of security screening. We serve three segments in that with that material system. So we are unique in the world. We are, as I say, the three other manufacturers of this compound, of this material, are actually embedded within three different sort of large OEMs as their internal sources of supply, with Siemens, with GE, and with Canon. And recently, one of the suppliers, Canon, acquired for $300 million as recently as last year, because it is a strategic material from a supply chain point of view, and they paid a strategic value for that business, very similar to Kromek, that company.
Okay, so I'm intrigued by the different parts of the business and how much of the revenue is made up by the different parts of the business. So can you give us a bit more background on that?
As I say, that there are two parts of the business, which is the advanced imaging and the CBRN. The advanced imaging is where we provide OEM component level products to these major OEMs, whether it's in security screening, whether it's in medical imaging or industrial imaging. And the other is the CBRN detection, which is for where we provide handheld end user product for the security and defense applications and civil nuclear applications. We don't financially completely sort of report as two segments, but we are starting to provide good visibility in terms of where our revenues are coming from. So in fullness of time, the two segments are going to be reasonably equal. At the moment, in this particular year, if you look at the revenue visibility, which we announced in May, roughly about 60% will be from the handheld detectors and about 40% from the medical imaging. But the two markets are quite different, and the revenue quality is slightly different. In the advanced imaging market, we have multi-year contracts in place, which means we know what our revenue is going to be for for a few years to come. And as we win more contracts, we will have a very stable visibility of revenue over 5-7 years. So this is a market which is characterized by these multi-year contracts. And we announced one in December 2021, again, a $17 million contract for 7 years. So those contracts are layering up. In the CBRN, it's more of a more tender-driven business, and that market is very active. We have a very, very good pipeline in that market. So the split this year is going to be about 60-40, but overall, the sizes of the markets are both going to be such that it's going to be reasonably equally split between CBRN and medical imaging.
Okay, so the medical imaging thing, I presume, was absolutely smashed out the park during COVID, because basically nobody was going for anything. So is this the real reason, really, why Kromek is so undervalued at the minute? Because basically it got absolutely hammered during COVID.
The last 2 years had been quite difficult. If you look at our three key markens, medical imaging, security screening, aviation security screening, and
nobody was flying either. So
nobody was flying either. And radiation detectors, which are used for protection of critical infrastructure and security, everybody was locked at home.
You say no one was running around with a dirty bomb.
Nobody was running around with a dirty bomb either. So look, we had 2 very difficult years, but at the same time, because of our government relationships, we continue to work with US government on some major projects in a new area of biopathogen detection, and we retained a core part of our business. So we are out of that now. So the market is coming, coming back to normalcy. So, the medical imaging systems, our customers are now seeing their market grow back on the growth path. They're going and installing new systems in hospitals. So hospitals are no longer just focused on treating COVID patients. So they are doing the normal stuff. Similarly, in security arena, as even without the war that is going on, the normalcy is coming back with people traveling, airports getting busier, and people again traveling between cities and countries. The normalcy within our markets are returning. But this is the one thing to realize, that key drivers of growth in our markets: early detection of cancer, early detection of critical diseases, keeping citizens safe from the threats of terrorism and other forms of nuclear incidents. Those are drivers that are long-term drivers, and that is what's going to drive Kromek's growth. And we have a very compelling offering to really keep growing on that basis.
On some of the information I've gathered on you, it's showing that Kromek has a revenue of about £10.5 million a year. And that was, I presume, the last figures. How progressive do you expect that to be over the coming years?
Last year, we reported, in May, our year ends in 30th of April. So the year ending May 30th of April 2022, our revenues is expected to be about 10.5 million, as you rightly point out. That was year ending 2021, and we just did a trading update, which is 12.1 million for the year ending April 2022. So we had about a 16% year-on-year growth in the last year. Going forward, the analyst expectation for this year, which is we have just entered a new fiscal year, is 18 million pounds of revenue, which is a 50% growth. And that really is an indication of the return to normality. So, where we were pre-COVID to where we should have been, we are back there now. And we are back on that growth curve driven by both the sectors. And we are going to see the sustained growth coming through year on year as like what we expected.
And from the broker scenario, the 18 million that we predict for 2022-23 year, is this now going to make you EBITDA positive or not?
Yes, we will be EBITDA positive at 18 million. So we will be EBITDA profitable to a tune of about £500,000 to £1 million. That's kind of the range that the brokers have. The revenue is very secured, and we typically communicate the visibility of revenue at the beginning of the fiscal year, and again at our interims when we announce our half-yearly results. This is the first year where we have entered the year with 100% revenue visibility of that entire 18 million. And we categorize our revenue in different ways. So 50% of that revenue is fully contracted and scheduled to be delivered within the time frame within this year. 13% is actually what we call run rate business, where we have a very predictable revenue from distributor-based sales and so on. And the remainder 37% is in what we call awarded but not contracted, which means those are the customers have taken those decisions and it's going through a contracting process at the moment. And the revenue realizable from those contracts are those 37%. Some of those contracts will be bigger, but this year we are going to realize that. So we have complete visibility of our revenue delivery for this year. And generally, pre-COVID, when we would come into a year, we would have at this stage roughly about 2/3 of our revenue visible. And we still have to, had to win another third of our revenue through the year. That still hasn't stopped. So we are going to win new businesses as well. So we are in a very strong position this year as we come out of this COVID years to really grow fast and in a sustained manner.
Though you can't say it, so you just nod, and I'll tell everybody you nodded. That you expect that basically the revenue in this 22-23, all things being equal, will be well into the 20 million mark.
Look, I mean, at the moment, we are very confident of hitting the expectation, and we have got a very strong pipeline beyond that visibility of revenue, which provides us lots of opportunity of upsides. But as it stands, we also have to appreciate the world is in a very strange place from a supply chain point of view. And we are taking a very conservative view in terms of not getting carried away, although we have a very strong order book. Commercially, we, in the last quarter of last year, we actually booked 5.9 million pounds worth of order, which was ahead of commercial expectation in terms of order booking. We are also acutely aware that the component availability in the market is still very, constrained. We have all the mitigation plans in place. Our inventory level is very high as a result because we have done lots of buying and advanced buying, and so we have secured a lot of our future. But we are keeping our grounds absolutely on feet on the ground, rather than getting carried away because of the commercial momentum we are seeing. So
Arnab, did you not read the notice before this interview? You're not allowed to keep your feet on the ground. You have to be very excited and tell us this is going to be a £1 billion company within the next 12 months.
Picking up on one thing you said earlier, I really must. This is about the Redland Technologies, which we know was snapped up by Canon, I think, in a deal that was worth about $270 million.
Yes.
And obviously they were effectively the only other, only independent competitor, let's say. And you've made the remark that you now remain the only independent one now, obviously, because they've been snapped up. What is the, I mean, again, I'm not asking for a forward-looking statement, but are you often approached, or, do you receive, let's say, communication from other, from big majors saying, we like what you're doing, in other words, is there a potential that it could be snapped up?
Look, we work with every major OEM in the medical space, medical imaging space, and in the security screening space. The market is going through transition at the moment, a technology cycle and a technology transition. And we, as an independent, the only remaining independent player in the market, have a unique position in that market. So, what our aim is to really be a high-value strategic partner to all of these OEMs, secure the high-value contracts, which are visible for many, many years, providing a security of growth with earning potentials, which are very attractive. I'll give you an example. In the CT markets, when we look at some of these OEMs, and you look at the next 15 years of their earning potential or revenue out of the CT market.
Just for the group, Anna, OEM, tell us what it is.
So OEM is basically companies who make the machines. So in the advanced imaging, we supply component level products, detector components, which goes into these diagnostic imaging machines, big CT systems, and big CT systems are only made by 5, 6, 7 to 10 players in the world. Now, if I take the top players within that market, over the next 15 years, each of these players have got over $10 billion of revenue that are attached to this market. And as the market is going through a transition of technology, if you get left behind on technology, that revenue could be at risk. And as a result, the earning could be at risk. And that is the way to explain why Canon ended up paying over $300 million for a company with a revenue multiple, as our analysts have speculated, in over 25 times revenue, which is slightly higher than most companies would normally put metrics on. So that is a strategic value. And the strategic value is only there because people are concerned about protecting their own market share as the technology transition is happening. And we sit on that technology transition piece. So we have that technology that enables multiple $1 billion worth of revenue in these end markets for key players.
So that was a very long-winded way of saying, yeah, somebody might buy us.
I think that's what I took home from it as well. And the other thing is that Senkos as well, I think the broker, actually, they said they had a fair value right now, or that was in October of last year, I believe, of something in excess of 50p. So ultimately at 11 pence a share, it's looking like a bit of a bargain right now.
Look, I think we concentrate on delivering our strategic objectives, and ultimately, we have got a very clear strategy in front of us. Win those work and get designed in those high value customer equipment, and then win those high value orders, which secures the future of that advanced imaging business for many, many years to come. On the other hand, in the CBRN business, it's all about channel to market. We have got unique products endorsed by, the best customers that you can have: U.S. government, U.S. military services, U.S. Homeland Security agencies, the UK security services. We are delivering multiple customers with products, but also we are developing new channels to market, which will provide real growth in this uncertain world. So you're absolutely right. Look, the valuation should take care of itself, but our job principally is to run the business well, and we will continue to do so. And the market will ultimately recognize the value of the business as a trade player has of Redland, which is equivalent to only one part of our business.
Yeah, I'll go one last question just on the finances things. Obviously, when you get to this 18 million of revenue, then we're at break even or hopefully a small amount of profit. So on this extra business that hopefully we're going to secure, what sort of margin are we now talking on? If you've got another 10 million of contracts, what would EBITDA become?
So typically our margins, we have reported consistently margins in high 40s to early 50s%. And that is highly dependent on revenue mix, but our margins have stayed pretty stable within that band of between 45 and 53% kind of margin range. So take that as a guide, and we don't believe that there will be a dilution of margin within that space.
So because a lot of this 18 million pounds revenue is obviously based on fixed costs, your factory, the workers, everything else, then we could be talking about 30-40% added to EBITDA of the additional above this. Is that fair to say?
Yes, I mean you're absolutely right. So beyond the EBITDA break even, a rule of thumb is almost 50% drops onto EBITDA on additional revenues. Yes.
Yeah. So at 30 million pound revenue, you're going to be looking at maybe 7 million pounds of EBITDA then.
Yeah.
Which then makes your for a fast-growing technology company, makes your share price look laughable, basically. So, yeah, no, it's good. And these things are not going away. I think that's the thing I'm taking away from this.
Very much so. And
we need them.
The world needs them. What we do is all about keeping people safe and save people's lives, whether it's in medical diagnostic or in security. And of course, one area that we haven't talked about, and this is a new area of the business which started really back end of 2018, was a biopathogen detection sort of program that we started with the US government in developing a monitoring system to keep cities and urban areas safe against the release of bioweapons by a bioterrorist. What we are doing under this program with the US government program is really automating all of that. So having air collection to complete identification of all the pathogens present in that air in a completely automated fashion. Now, that is a program-based sort of area at the moment. But when you think about the application, it's fast. And we have developed over the last 3 years through a DARPA contract, which is over $13 million, a demonstrator which is capable of doing that. And now really a start of that commercial journey. And the market sizes are huge, and the application as a result of COVID has expanded. So we have written some interesting white papers, which are being taken very seriously by national governments at the moment in terms of how national security or bioresilience to prevent the next pandemic can be done, because our detectors can be networked. Many of these detectors can be networked over cloud, and you can realistically build a whole pathogenic signature of an entire country's border, for example. So it is a unique capability. And
basically see what's coming in and decide.
Absolutely. So if this technology was available back in 2019 and the end of 2019 and was deployed in every airport, we would have known that an unknown virus is circulating in the air. And imagine what last 2 years could have looked like if we were able to close down and took mitigating action right in those early days when there were no PCR tests, there were no lateral flow tests. So this is the only technology whereby you can build a real early warning system. Like we have early warning system against dirty bombs, this is just adding a unique biodetector capability onto that early warning system, not only to protect cities and infrastructures against the threat of bioterrorism, but also ultimately emergence of new diseases, whether it's plant-based in food security, animal-based again in food security, or human threats,
One last question before we go, Arnab, because this is the Sunday roast, okay? And basically we ask everybody, what is your Sunday roast? If you had a choice of any Sunday roast, what would it be?
It has to be a proper roast with Yorkshire puddings and gravy and pork. That's my favorite.
Always going for pork. I'm beef or lamb man myself.
With crackling.
Crackling, yeah. Good
pork
chef.
With crackling. No, not just pork. Applesauce?
Absolutely.
Applesauce, all the veg. And lots, if you're from up north, it's got to be lots and lots of gravy, no?
Absolutely. Lots of gravy.
Probably a bit of red cabbage on there as well, I imagine. It goes quite well with pork.
Spice red cabbage, yes.
Yeah.
Absolutely. Thank you very much.
I'd say Arnab Basu, CEO of Kromek Group, thanks very much for your time.
Thank you very much. You're most welcome. Pleasure.
Well, I'll tell you, I really like some of these technology companies, some of the products, how it's amazing how it went from during COVID to having, as you say, people were not going using airports. Obviously, people were not traveling around, so there was less footfall. But now it looks like everything's kind of like it's the perfect time. It's a perfect storm where airports, so there's problems going through security, the length of time, staffing issues. So if this technology can expedite that whole security screening process, then ultimately this technology is going to make a difference. And as he rightly said at the end there, Arnab said that if we have this big cloud network of detectors on borders, or on borders, meaning borders, passport borders, then ultimately at airports, if they can detect a new pathogen in the air or a new virus, then ultimately that we could prevent the stop of the next pandemic, or certainly stop it in its tracks earlier. So game changer for me, if they can, and it sounds like it's been going on for many, many years. This isn't just new technology that needs to be proven. This is actually proven technologies that they've been running for number of years. And clearly, with the likes of Canon acquiring companies, it just feel like it's a matter of time before someone may come along and swoop on them.
When you look back from what happened in 2020, there was a lot of volume around the time of COVID, the same as a lot of stocks, obviously. There was huge volume of sales because of the airport, and also the fact that the medical practices weren't going to be used during COVID. So sort of crashed that point from 2020 plus down to the sort of price it is now. And then it went again back up to the 20s, and then now it's come back down again to the 11, 12p range. And I think the stars are aligning for this one by the looks of it. EBITDA is going to be positive this year based on revenue they already know about, like contracts signed and everything else, as he explained to us. So any further deals should enhance this situation, and I think it should go back to the 20s at the very least. And what was it, the note that
Senkos had a note out that they said fair value should be in the 50p range. So that was in back end of October last year, when the share price was, I think, around about the 11 to 12p mark. It may have even been higher. I think it may have been around the 18p.
Senkos don't really mess about when it comes to the technology ones either. They normally seem to get it reasonably correct. So, interesting play, definitely. I mean, slightly different than our usual resource sector plays, but I really do think it's got a great chance.
So what else has been on this week? Well, I know we've had the big one was on Monday of the week just gone, where we saw Ben's Creek announce the commencement of rail delivery on the loan facility. Obviously, there was a little bit of a reaction in it. It was probably an anticipation of that news, because obviously we had him on last week on the midweek, and we obviously talked about the first train, and then obviously there was an announcement that the second train that actually was on its way back, so they were going to use the load out facility and get that second 11,000 tons down to the port and on the ships and away to the offtake partner. So I think it's really good. I think there's been a slight drop in the met coal price, cooled off in the last few sessions, and obviously we've seen the share price drop a little bit to the sort of late 70s, early 80s right now, or as of close on Friday. Thoughts on Ben now going forward?
All of the executional risk has nearly gone. Yeah, I mean, basically we had this share from 10p basically last October, and it was completely about executional risk. And Adam came on to us and spoke that there would be trains coming in to collect the coal in February and March, and then it didn't happen basically until June now, like the beginning of June. So you can quite clearly say there has been a delay of a few months. But the reality during that time is that there has been 2 further purchases of land or royalty agreements, which is going to increase the amount of coal that they have in totality. And, during that time, the met coal price has soared. Yes, it has come off a bit in the last couple of weeks. Again, I asked Adam what he thought about that, and he said there isn't any real reason for it. So maybe it's just a seasonal issue. As China gets back on course and different providers get back on course, then producing more steel, then I don't anticipate it's going to slide, because there just isn't enough coal. Yeah, it's slipping down into the 70s, becoming not bargain territory, but I mean, this is going to be steady, just lots and lots of EBITDA. As Adam said, hoping to get 7-8 trains by August, I think. The EBITDA and the revenue on that, the revenue could be close to 25 to $30 million a month. And EBITDA on that could be like half of that, basically. Mm. So, it's, if you like, the strategic risk, in my view, having been there as well, and you've been there obviously as well, we've seen it in operation. I think the risk is minimal now. Whereas, the trains have gone out, the coal's happening, it's how much coal can they produce. So then it just becomes like a money-making machine. So based on the current price at the minute for the money-making machine it should make over the next 12 months, I personally think it's... I wouldn't go so far as to say cheap, but it's very reasonable.
Yeah, I mean, the market's not really... I mean, it went up to about 108, 19 or something, so at the early ones, probably on more anticipation, a lot of these things do rise. And then now it's cooled off, which is probably a bit of a healthy consolidation, let's just say. It does feel like it's only time before really people start to see the numbers you just talked about. If you can get that, that 70,000, 80,000 tons a month going out, which would build up to the million tons per year or annual shipment would be fantastic, which is what he's always kind of built to. So I think it's got a long way to go, but I think we just got to be a bit more patient for it now and see how, obviously they're not going to announce any subsequent rail load outs.
Deliveries,
deliveries or exports, whatever you want to call it. And then effectively the only other thing, well, not the only other thing, but one of the other things that's imminent is the Marshall-Miller report, which of course, based on the fact that I think the original figure was like 17 million tons on that particular Ben's Creek. But in the meantime, since the prospectus was written, of course, they've acquired two adjacent properties or sort of that border the current operation site. So, it'd be nice to see an uplift in that number. And I think it would be right to assume that there will be an uplift in that number.
Yeah, I mean, we have to wait and see. But I mean, Adam didn't buy those to not have coal on them. So, I mean, it seems bizarre that if it wouldn't go up. But obviously, these guys have got to do their work and analyze what it is. I mean, if you remember the original prospectus said there was 12.5 million. Sorry, there was 2.5 million of coal that was there, and nobody could argue about it. There was 17.3 million of proposed coal, which now I think they're now going to say is finalized. And there was the potential on the original Ben's Creek for 50 million tons of coal. And this was before they bought the other two bits. I think from speaking to Adam previously, and even when we were there, I think it's within the next period of time that they're going to start drilling to increase that amount. Anyway, regardless of what is agreed, the figure is now. So, yeah. Sure. No, I think it's all looking positive, but we all want shares to go up in a straight line, and they normally don't. So, let's see what happens.
Exercise some patience, and as you say, I think it's been massively de-risked now, and the execution element of things has been carried out, and it's looking good. So moving on, there was also on Monday the Blencow Resources RNS that came out, which was looking at the final stage 5 MET test results, which underlined a high quality end product as concentrate from Oran Cross graphite project in Uganda, basically. So it looked good. We talked to Mike about the different uniform mesh sizes and how that would give them a kind of wider range of offtake partners should they ever, should they enter into any kind of agreement. And it all looks good. I think any day now they're looking forward to the PFS coming out, the pre-feasibility study, which should come out. I wouldn't say any day, but certainly within the next month or two. I think we can look forward to that. As something. Thoughts on Blencow?
No, nobody gets how much it's worth. I think ultimately, I don't have any other thoughts. No. It's like what's its market cap at the minute? It's let me just have a look. It's currently market cap of 6.4 million. Yes. It's not very clever in terms of what it's potentially going to be worth, which is literally hundreds of millions of dollars in terms of the graphite. Yes, that's going to take a while, but seems, and I think we can say this about quite a few of the stocks, they're massively oversold. And also, for the asset values, they don't ring true. Colin Bird actually said something very good during the week when we were talking to him about one of the things, that last year and the year before, there was a lot of money raised for these different projects. And basically none of those shares have particularly gone up, yet all the money or not all of the money, but a large proportion of that money has been spent and put in the ground and taken these projects to the next level. So Brere's pre-feasibility study coming very shortly, and it's going to prove without a shadow of a doubt, I'm sure, that this project is worth doing and worth, probably hundreds of millions, if not considerably more. I don't know the numbers involved, but to say now that it has a market cap 6.4 million is probably putting net present value, about 0.5% or something of the net present value of the project, which is just ridiculous.
Yeah. So another one that came out Monday was BSF Enterprise. They announced the immediate appointment of Graham Duncan as CFO of the company. And then also the announcement that they opened the London office, which opened from June the 6th. So, yeah, I mean, it's interesting, isn't it, that they're putting a new CFO in place. And apparently he brings considerable finance and accounting experience, which obviously will be of great benefit as they look to build on that recent RTO of 3D biotissues, which obviously we had Jeff and Cheon on the show a few weeks ago now. looking forward to seeing what these guys are going to come up with.
Yeah, it's a very interesting play. I mean, you were talking about with like the technology one, but this is out there, isn't it? It's creating the meat as real meat, and not like a meat substitute. This is going to be meat that we all like to have, and the technology is available there to produce the right types of meat. So in other words, if we want fillet steaks or we want ribeyes or we want, whatever, basically we don't have to have 50 cows to get this many ribeyes. We can just produce this many ribeyes, So it's fascinating. It's fascinating. But the real kicker in that one for me is that they have the patent and the commerciality on the feedstock to help others do this as well. So this is where I think this company could be financially absolutely amazing. Is yes, they're going to produce this stuff, but actually they're going to be selling the feedstock, which is vegetarian feedstock, if you like, whereas the other stuff has to use nasty parts of cow birth and all sorts of things. So, yeah, I think it's got a lot of legs. It hasn't been noticed as yet by the market at all, but obviously as news comes, hopefully that's going to change and things are going to start moving.
Moving on to the next one, we had the Carroll Minerals and Besant Resources Cyprus joint venture drilling update. Now, quite an interesting one, this, because obviously Carroll, we were introduced to that probably about 18 months ago. We've had Martin Churchhouse on the show, quite a number of times now. Always enjoyed talking to Martin. Always, he welcomed us into Cyprus as well and showed us around a couple of their mine sites, Truly and Kalavasos. And obviously there was an announcement about a month ago that announced that he would be stepping down from the role, even though he's going to be on still maintaining an advisory role for the company. But ultimately, the new chairman, Charlie Long, has basically come on board to replace him. And basically, Charlie's now actually running things as CEO of Carroll. So it's interesting. And they announced about 3 weeks ago that they were going to go into a strategic partnership with EV Metals, who are a significant shareholder in Carroll Mineral, and that's an interesting kind of a new direction that they're going to be headed in. So it will be very interesting to see how things progress in terms of the new vision, that leveraging the projects that they've got in Cyprus, the copper mines, and how that'll integrate into a company who has a supply agreement with some pretty major players within the battery space, right?
Interesting progress. I think EV Metal is going to play a big part of what they're going to do. And, actually it should produce revenue for Keras as well in many different ways other than just the mining. So it's going to be an even more interesting play, I think, than it was.
Moving on to the other one, which came out on Friday morning, was Sovereign Metals RNS regarding the announcement that they are leading global market position beckons for the Casillas low-cost flake graphite co-product asset in Malawi. So what are your thoughts on that one? I mean, we talked to Sapan on Friday anyway about this one and put out a separate podcast, which is well worth a listen for the whole talk about rutile and graphite and the kind of like the meaning of the mesh sizes, etc. There's quite a lot of technical data in that call, so it's quite in-depth analysis of the stock. But for me, this one is with the world's largest rutile deposit and the second largest graphite play, it looks very interesting.
Yeah, I mean, this one is like a monster. They had news a while back, didn't they? And the share price went from 30p into the 50s, and now it's back at 30p. So why is it back at 30p? The news is still there. It's still the world's biggest rutile resource. It's the second biggest graphite resource, and the graphite that's in the ground is the right type of graphite, for the cathodes, for the lithium-ion batteries for the EVs. So, I mean, it's an absolute no-brainer. I mean, I would suggest you listen to the podcast we've put out if you're interested from Sapan. I think there's going to be a heavy summer of news coming in of all the different stuff that they're doing.
Yeah, they've got the scoping study to look forward to in the next month or two, haven't they? Which was discussed on there as well.
And, I still will say to you, there's going to be big M&A in all of these areas, because the gigafactories and the people who supply the gigafactories need this graphite. So if you had your choice and you had to have this graphite to make sure you opened your gigafactory, what are you going to do? You're going to secure the graphite or not? you're going to take big offtake agreement, or you're going to actually maybe buy into these projects. So one way or the other, this is going to happen. I mean, we were joking with Sapa on how much he would take today for the price. I can't say what he said, but significantly higher than 30p, let's put it that way. Yeah. So I think there's a lot of upside in this. It's a good lesson. Sapan is a good guy and he knows what he's talking about. So, I think it's a good. But we keep saying this about how many stocks have we been saying it about?
Oh, there's so many out there that are undervalued. I mean, one that we didn't touch on this week, and again, this is not basking in any, because I hate seeing investors lose any investor lose money, was the announcement on Monday at 7 a.m. that Clontarf Energy put out, saying that they basically the Sasanoff one well reached a final result, and it reached a total depth of 2,390 meters. And unfortunately, as soon as you see the words "no commercial hydrocarbons were intersected," you know it's a duster. And the share price dropped, I think it was about 80% on that news. And again, this is another reason why I can't personally, I don't know about your thoughts, but I can't invest in a wildcat drilling company to be able to, on one announcement, lose 80% of the investment. It's just not worth, when you've got other companies out there like Orcadian Energy who've actually got proven and probable reserves, 2P reserves in the North Sea in a safer jurisdiction. Why would you want to put it into a company that hasn't got any reserves? I understand that these companies need that. They go to market to get to it for the exploration cost. But for me, hearing people who've lost 40,000, 50,000 pounds on this stock is just, it makes me shudder.
They talk about the AIM casino, but ultimately those wildcat ones are exactly what that is, isn't it? It's an AIM casino. So if you've done your research and you know that you're betting on black or red, then okay, you have to accept that that's the way it is. But so far we've had two, haven't we? We've had Imperium and this one now in the last period of time.
And ADV Energy as well, which took
ADV Energy. So we've had three.
We have
so
three
maybe the next.
So people need to learn from this.
So maybe the next one's going to be a hit.
And the other thing is, I'm hearing people on these groups saying, "Oh, someone told me to put 35 in this stock, or for whatever, invest large on this stock because it's going to give us the results." Now, no one's going to know those results unless they've got some leaky inside info, which I wouldn't trust anyone to say. And I'd also question why they would be sharing that information in the first place, because that's a very, very thin line to be treaded. Yeah. So ultimately, if anyone ever calls you up and rings you or even sends you a message saying, "Get all your money in this stock," you need to think long and hard whether you should be in this game, because
you sound like you're on the security team of the bank. When I send an international payment now, every time I make a payment, I have to ring the security team because they're like, "Were you pressured into this? Did you do this? Did you do that?"
Absolutely.
I'm like,
I get annoyed. I actually sometimes ring the bank and say, "Could you just let me get on with these transactions?" And they're like, "But we can't, Mr. Cat." And I'm like, "Yes, you can. And you're stopping 1 in 2 of them and being a stock, putting a button out. It's not as bad as having every single one done, like in Egypt you're experiencing. But wow." Yeah, I mean, and again, I'm not preaching, but that's how I feel about it. I hate hearing about people losing a lot of losing the shirt on these companies. Because ultimately, we want people to win, right? We don't want to take that liquidity out of the market as well.
Yeah, absolutely. And it's sucked even more liquidity out of the market. And we were talking about this earlier, weren't we? How much liquidity has been sucked out the market because of cryptos in general. It's a trillion dollar business, and it sucked a lot of money out of probably the small cap market more than anything, because that was the risk part, if you like, of the economy. But there is value there. Without doubt, we are approaching massive value. We are fearful to the extreme at the minute. Yeah. And we were greedy to the extreme. So as all things go from one extreme to another, there will be a pendulum swing, and it will go back, not necessarily to greedy, but it doesn't even have to go back to greedy for some of these values to literally double and quadruple and treble and all the rest of it. So good luck.
Yeah, on that note, have a great week, rest of the weekend, and we'll catch up next week.
Yeah, and you. Enjoy your travels.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.